Okay, so today we're gonna do no bullshit, no indicators, just pure price action. And I'm gonna show you guys how to snipe these trades when you don't have because not everybody have the luxury of having Cypher and whatnot, right? So for those of you who don't have the budget to be able to purchase softwares, I'm gonna teach you guys how to trade pairs like gold. So this is something that I've been telling you guys from inception. Gold is a trending instrument, okay? XAUUSD, trending pair. Now, what does trending pair means? So in the trading world, there's two types of pairs. There's currency pairs that are more stabilized. So it ranges. We call them consistent pairs. And then we have markets like gold and crypto, which we consider trending pairs. Okay. So trending pairs such as US 30 and gold, if it starts going to one direction, it will not stop just because it sees a support and resistance. Okay. So trending pairs, they're more ideal for if you guys are trying to catch a trend and you're more familiar with trend trading. Right. So if you guys are more of a trend trader, and you're really good at using trend-based strategy, this is the most perfect pairs. These are the most perfect pairs to trade. So gold, US 30, Bitcoin sometimes during high volatile moments, and some exotic currency pairs. Not me personally, I do not trade exotic currency pairs. I trade US 30, I trade NASDAQ, and I trade gold. So these are very profitable if you can learn how to trend trade. So how do we identify the trend? So first, what I like to do before I even start trading, open up my chart and I like to look at the chart and try to identify what is a current trend right now. So anyone who is even half blind in their eye can see that gold is currently uptrending. How do we know? Because it's consistently creating higher lows and a higher high. That is what a trend means, right? When it's creating higher lows and higher highs. So on the daily time frame, it's doing higher lows and higher highs. In the 1 hour time frame, it's doing higher lows and higher highs. In the 30-minute time frame, it's doing higher lows and higher highs. So why is it important for you to identify which direction gold is going? Why is it important? Because we need to understand that more of your buys are going to be profitable than your sells. The reason why is because you have to follow the trend. So I'll give you guys an example. Let's say this is a terrible example, but let's say you guys went gambling, right? Let's say you guys are at like a baccarat table where it's like 50-50. Let's say it's been player like 10 times in a row. Most people are gonna say, oh, we should probably do banker now because banker is gonna come any second. So they're gonna try to martingale and counter the bet. And most of the times they lose. Why? Because the trends are patterned for a reason. So if there's a trend, more than likely, the next one will be where the market is headed. So if the market is currently uptrending, right? Chances are until we break out of the recent lower highs, we will see a consistent rise of a trend. So that is something that you need to note when you're trading pairs like gold. So something that you guys should all be doing when you're trading gold, identify, zoom out, don't panic, identify the current pattern. Is it uptrending? Is it downtrending? And I'm not saying you guys cannot do sells and shorts during the uptrend. Not saying that at all. You can definitely do it if you're a seasoned trader, but if you're a new trader and you're a beginner trader and you don't know what the hell you're doing, I strongly suggest you start off with just trend trading first. This will save you so much more money and losses. It will prevent a lot of losses. So make sure you guys do that and make sure you perfect these techniques before you proceed. Now let's look at some candlestick patterns. Okay, we're in the 5-minute candlesticks. 5-minute, I'm not seeing any significant pattern. Let's go check out 1 hour. Okay, we're seeing a bit of a wick action happening in the lower end of the channel. So typically when you see these type of wick action, it's a sign that we're seeing support, sign that we're staying remaining consistent with the current trend. So we saw a support here. So it is currently creating a higher lows and higher highs, just like I already had mentioned. So, and it's almost like an ascending channel right now. Okay. And this is actually good because right now it's gold has made a pattern just going up, down, up, down, up, down. So it's consistently creating higher lows, higher highs, and it's making a small correction, small correction, small correction. And this is good because every time it makes a certain percentage of correction, you guys can actually look at the retracements and try to identify where would be a good place to enter into a trade. So a good example of this is you could identify the previous low right there. You can see previous low was right here. So let's say, for example, you're looking at this candlestick. We see a bullish engulfing. So a bullish engulfing is a good indication of placing a buy. So you could place that buy. Yes, you're going to be in a bit of a drawdown for a period of time unless you are scalping. If you were scalping, you would have been instant profit. And depending on what style of trading you are doing, you can make quick profits in and out, in and out. But me personally, what I like to do, I like to go in and out with gold with a larger position. The reason why is because then I can make a lot more money very quickly. So instead of holding on to my positions for a long period of time, waiting for it to go into profits, I like to snipe these entries and look for these rejections and supported areas by looking at the candlestick pattern. And I like to place price actions. I'll be honest with you guys. If you did have the sulfur cipher, it is so much better. It's a cheat code, but I know that not everyone can afford Cypher, so we're gonna do this the old school style. But for those of you who are currently on this call who does have Cypher, um, I have no issue with you relying on Cypher signal because you will overall make way more money than if you were to manually trade just using your own techniques. And the reason why is because Cypher removes the psychological aspect and the factor of you not understanding, okay, is it a buy, is it a sell? So sometimes like us traders, like we confuse ourselves, right? And it takes away that emotion, takes away that psychological factor and helps us identify more clear vision of where we need to enter into the market, right? But for more seasoned and veteran traders, we don't need, in theory, we don't really need Cypher, but it's more so for like handicapped traders who need that extra boost. I know that's not the most pretty word, but it is what it is. Sometimes we need to cheat a little bit to make more money, and that's absolutely fine because the markets are crushing us every day, right? So why not us retail be like a whale and trade like a whale? So we can trade like an institution by removing the emotional aspect of trading. Because number one reason why people lose trading is because the emotional aspect. So again, we're looking at so that's a new higher high, right? So we see a higher high right there. And again, we're looking for a pullback. We see that pullback occurring with that candlestick. And then what you want to do is you want to wait until it retraces to the previous candlestick. So it retraces to the previous candlestick. And at that point, you can place a buy limit around the area of the previous candlestick. Why? Because it's consistently creating a higher low and a higher high. So here, I'll mark it up for you guys so that it's easier to see. Okay, so we see a higher high here, higher low, and then we see another higher low, and then higher high, right? So it's just consistently forming higher high, higher low, high, higher low. So let's just be honest here. Like, what do you think is gonna happen next? Like, based on the current pattern, this is pretty freaking obvious, right? So all we have to do is watch for this to retrace, right? So if we're following the current pattern, all we have to do is just watch for this candle to close. Whoops. We want that candle to close near the higher low, okay? So we wanted to create another higher low, which it did, and go back, retrace near the higher low. And what is that price point? Or approximately 26.56. So around 26.56, we should expect a retracement if it just continuously following that pattern, unless, of course, the pattern has been doing since what is this? Like since Monday of December 3rd is 30th. It's been doing the same pattern over and over. And I assume that for the rest of the night, for the most part, it should do the same thing. Now, guys, there's one exception, one huge exception to this rule. when you're doing technical analysis and you're trading and making crazy obscene amount of money by following this trend, higher low, higher high, higher low, higher high, and it's just being very repetitive and obvious, right? There's one rule of thumb that you guys need to follow, and I want you guys to write this down if you have a piece of paper or notes. Guys, this goes right out the fucking window on dates that have economical factors. So, such as like non-farm payroll, CPI, the manufacturing, the report, and tomorrow we have Fed's, the Federal Reserve's speaking on the markets, right? So when they do that, so tomorrow is not NFP, just so you guys are aware, tomorrow is not non-farm payroll. So today is Thursday, January 2nd of 2025. However, this month, we are not doing non-farm payroll this Friday for the first time in a long time. They decide not to do it this Friday. They're gonna do it next Friday. Okay. And so those of you guys who don't know what the hell I'm talking about, that's a sign that one, you need some serious mentorship or one-on-one mentorship with me, or two, you need to go do some more research and understand what fundamental analysis is and understand what non-farm payroll is. Because if all these things that I just mentioned are foreign to you, chances are you probably need some one-on-one classes to go over those materials, or I can send you those materials and you can learn online. Either ways, I'm here to help you guys. So NFP is not this week, NFP is next week. So that's the only time when the market will be severely impacted. So you guys see how it's just doing the same pattern, right? When they release the news, this could do this, okay? Very well do this. It started doing crazy shit that we did not expect. So things that was not supposed to happen, it drops like 100 pips or 1,000 pips. It can go back up like 500 pips. It can then retrace back like 30%. It can then go up another 15%. It can go up another 50%. Like there's no telling what's going to happen tomorrow, guys, right? Because when you're dealing with fundamental analysis, like anything goes, guys. Like anything goes. Anything can happen. We're all in the hands of Federal Reserves. Okay, so guys, just be mindful of that when you're using my technique, such as this channel break strategy, and just observe the candles, like watch the price action of the candle and watch how the previous candle closed and try to line it up and try to see, okay, so we had a candle close, we had a candle support previously in the previous higher low at approximately 2654. So, and then we had another candle support right above 2656. So the next candle, when it retraces, most likely based on the current pattern, should close around 2650, between 2654 to 2657. So in that case, what does that signal? Okay, we're still good for this current pattern. So what am I gonna do? I'm gonna watch for that candle to either show a wick action or a lot of bullish momentum, and I'm gonna place a buy. Okay, so 10 lot, right? You're gonna place a buy 10 lot, make a couple $100, maybe $1,000, and I'll exit that position. Right? Boom. I just made someone's salary in matter of few seconds. Right? So guys, this is actually a lot less complicated than it is. So I'm gonna share this recording with anyone that does want it. That being said, I want you guys to understand and practice this technique. So as a assignment, I'm gonna have every single one of you guys draw this line on the recent gold and 30-minute chart and identify all the high lows, no, all the higher highs and higher lows. And then I want you guys to identify where you would place buys, okay? Because the current trend is a upward trend, right? So I want you guys to explain why you would do it and identify all the entry levels. And that is gonna be your homework. Let me just end the recording. So I want you guys to post this in the